Walking into a bank these days sometimes feels like stepping right into an episode of Black Mirror. Everything's so high-tech now. And getting ready for this deep dive into the top 10 North American banking trends really drove that home.
It's true. The future of finance is definitely looking more, shall we say, digital.
To say the least, we're talking AI running practically everything. Banks are moving to the cloud like it's the only option left.
Yeah, it's really quite fascinating to watch, actually. All of this is pushing banks to completely rethink their entire approach. It's not just a matter of tacking some new tech onto an outdated system.
No, definitely not.
They have to completely adapt to this whole new era of what customers expect. And the financial landscape is changing so fast, too.
It really is. I mean, think back to when we were first getting used to using basic banking websites. Even those early chatbots felt futuristic.
Oh, yeah, for sure.
But get this. The first thing this report jumps into is generative AI, or Gen AI as they're calling it. And it makes those old chatbots look like toys.
They really are a whole different animal. This is AI that can actually anticipate what you need before you even realize you need it.
Okay.
Imagine you're planning a vacation. Your banking app could proactively suggest different ways to save to reach your goal faster.
Whoa.
Or it could automatically adjust your investment strategy to take advantage of shifts in the market.
Wow. Okay. But doesn't that seem a little invasive? I mean, it sounds great in theory, but now my bank knows more about my spending habits than I do.
It's a tightrope walk for sure. Banks are having to figure out this balance between providing a truly personalized experience, but also making sure the customer feels like they're in control of their data.
Yeah. You don't want to walk into your bank and feel like they know what you ate for breakfast that morning.
Right. Hyper-personalization only works if your customers trust you and are comfortable with how much you actually know about them.
So transparency is key.
100%.
Speaking of transparency, the report also highlights this trend they're calling bridging the digital divide. And I have to admit, I kind of feel like banking has become a little impersonal lately with all the technology.
You're hitting on exactly what this trend is trying to address. It's like we embrace digital banking because it's convenient.
Right. Easier.
Exactly. But somewhere along the way, we lost that human touch.
And some of us miss it.
Absolutely. And honestly, more than some. So now we're trying to figure out how to use technology to enhance human interaction in banking.
So we're not just trying to replace bank tellers with robots.
No. This is about figuring out how AI and people can work together. For instance, AI could be used to take care of all that data entry and paperwork that takes up so much time.
Which frees up the financial advisors to do what they do best.
Right. They can spend more time really understanding their clients as people, what their goals are, and what they really need.
So technology is being used to make those human interactions more meaningful, not less.
Exactly. Though, let's be realistic for a second. You can have the most advanced AI out there.
The friendliest advisors, sure.
But if your employees don't know what they're doing, none of it's going to matter.
It's all pointless.
And that's why the report stresses the talent imperative. It's a huge deal right now.
Makes sense.
Banks are starting to see that investing in their workforce is just as important as investing in new tech.
We've all been there. You're stuck on some banking website that hasn't been updated since the 90s.
Oh, I know it well.
And you finally get someone on the phone, but they act like you're speaking a foreign language.
It's incredibly frustrating.
Yeah, it is. So this is about finally saying enough is enough and fixing these problems for good.
This trend is about banks upskilling their employees so they can actually help their customers. And that includes things like providing training on the newest technology, like AI.
Like AI, okay.
But also, cybersecurity is huge right now.
It's only going to become more important.
Exactly. These are in-demand skills. So if anyone out there is looking for a career change, keep that in mind.
Yeah, that's a good point. So let's shift gears a little and talk about something that will probably impact our listeners more directly. Dynamic pricing. What is it exactly?
It's not a new idea, but generative AI and the sheer volume of data available these days has really changed the game.
How so?
It used to be that everyone basically got the same loan rates or credit card offers, but with dynamic pricing, those offers are tailored to your specific financial history.
So instead of a blanket interest rate for a car loan, mine would be based on my credit score.
Right. Your credit history, your payment history, all of that could be factored in.
Oh, wow.
Or imagine your insurance premiums changing based on how safely you actually drive.
Hold on. How would they track that?
It's all about the data we generate. But that does bring up a very valid concern some people have with dynamic pricing.
Yeah, how transparent is this really going to be?
Right. We can't just hand over all this power to AI and hope for the best. Consumers need to be able to understand how their data is being used and what factors are driving these prices.
That makes sense.
Trust is everything in finance, and that's something banks are really going to have to prioritize as they implement these dynamic pricing models.
Whenever I hear about a major tech upgrade, I always wonder what happens to the old stuff.
Right. Like all those old systems running in the
Are
background.
they just trying to slap some new code on top of a system that's older than we are?
It's a good question, and it actually ties into the next trend from the report, rethinking those core banking systems. And yep, generative AI plays a role here too.
So they're actually going back and rebuilding those old systems from scratch.
Kind of. It's more like they're using Gen AI to modernize those systems. Think about it like rapidly translating code and seamlessly integrating new capabilities into the existing framework.
So it's still the same system at its core, just with a serious performance boost.
Exactly. Gen AI helps make these old systems more efficient and secure, which is critical in this day and age. And it makes them much more adaptable. We're talking about bringing them fully into the digital age.
Okay, that makes sense. Speaking of things that need to adapt, let's talk about the Fed funds rate for a minute.
Always a hot topic.
And for good reason. The report actually spends some time breaking down what a declining Fed funds rate could mean, especially for mortgages.
It's something a lot of your listeners are probably curious about right now.
I bet so.
Yeah,
Is this finally the light at the end of the tunnel for the housing market?
potentially, yes. The report suggests that we could see some relief in the mortgage market thanks to these lower policy rates,
So lower rates overall mean lower mortgage rates.
which could be great news if you're thinking about buying a house or maybe refinancing.
That is good news for consumers. But what does that mean for banks? Are they just going to take a hit to their bottom line?
Well, they're definitely going to have to be smart about it. Lower interest rates could mean smaller margins for banks. That's why the report highlights another major trend, cost discipline.
So they're going to have to find ways to cut costs to make up for those lower rates.
It's all about finding efficiencies wherever possible, streamlining operations, optimizing processes, and that's where technology comes back into play.
Because technology can help automate a lot of those processes.
Absolutely. By using tech to automate things that were previously done manually, banks can reduce overhead and improve efficiency, which honestly is a win-win for everyone.
Yeah, no one wants to feel like they're paying for some clunky, outdated system.
Right. When banks are efficient, it leads to a better customer experience overall. Now, for the final trend we're going to cover today, and this one's a big one, generational wealth.
This is about that massive wealth transfer that everyone's been talking about, right? Millennials and Gen X finally inheriting all that boomer money.
That's the one. It's a staggering amount of wealth changing hands, trillions of dollars. And the report refers to this trend as generational wealth experience management.
Which I'm guessing means banks have to figure out how to manage the money of people who aren't their usual clientele.
It's a whole new ballgame. Banks are having to adapt their services to attract and retain these younger generations.
Well, what millennials want out of a bank is probably pretty different from what their grandparents were looking for.
You're not wrong. This is a generation that grew up with the internet. Transparency is huge for them, and they expect personalized experiences in pretty much every aspect of their lives.
Banking included.
Especially.
Yeah.
And they're not afraid to switch banks if they're not getting what they need, so it's not enough for banks to just offer the same old products and services.
So what are banks supposed to do?
They need to become trusted partners in their clients' financial journeys. They have to provide the tools and resources to help this generation manage their money. And that includes things like financial literacy programs and personalized advice. It's about building relationships.
So banks are having to juggle a lot right now. Adapting to new technology, trying to meet the expectations of a whole new generation of customers, and all while this huge economic shift is happening right before our eyes.
And we can't forget about the constantly changing economic landscape. It's a lot to keep up with, but it's also an exciting time to be in finance.
We've covered a lot of ground today. AI, generational wealth, the future of, well, everything, really. It feels like the banking industry is on the verge of some major changes.
Definitely a time of massive upheaval. But here's the thing to remember. We aren't just observing these trends from the sidelines. We're active participants in all of this.
Good point. As consumers, we have a lot of power here.
Exactly. You get to decide which banks you trust, which services you use, what you're looking for.
Ultimately, we're shaping the future of banking just by participating in it.
I love that. It's true. And when you think about it that way, it becomes really exciting. Imagine a future where your banking experience is built around your values.
And your goals.
Absolutely. Where technology is working for you to help you achieve those goals. That's the future these trends are pointing to.
So it's not just about understanding what's happening in the banking industry. It's about taking that knowledge and applying it to our own lives.
Exactly. Now that you're armed with all of this information, what are you going to do with it?
Yeah, that's the question, right? Will you try out one of those new banking apps we talked about? Maybe do a little research into AI-powered financial tools?
Or even just pay closer attention to how your bank is adapting to these changes.
The future of finance is happening right now, and it's up to all of us to decide what we want it to look like. Thanks for joining us for this deep dive into the future of banking. Until next time.